Hey everyone, Gary Wilson here. Welcome to this week's Wealth Wise Wednesdays. Okay, great subject tonight. We just went over it on the weekly webinar for our students. Thankfully, for one of our students, Shannon Goldsmith, posed the questions, and so I'm going to take one of them and go over them here. Okay, it has to do with it's a negotiating strategy. So the case scenario is this: let's say you have a multiple offer scenario. Okay, highest and best offer. You're an investor. You're putting an offer on a property, and the other side writes back and says, "Hey, there's three other offers. You got to give me your highest and best." Called multiple offer scenario or highest and best scenario. Uh, Now, what they're supposed to do is actually disclose that. There's actually a formal form to do that. The realtors are supposed to do this. A lot of them don't even know about it. A lot of them, unfortunately, uh, sadly, any disservice to their client, don't even know that they're supposed to do that, and they just say, "Hey, look, you got three offers. Let's take the best one and move on." What they're supposed to do is respond back to everyone saying, "We got multiple offers. Give us your best shot." Think about it. For the seller, that's a win-win situation. At a minimum, going to get what they already would have gotten, and more likely they'll get even more. So in any case, that's what's supposed to happen. And let's say that happens to you. You're a buyer, put the offer in, and you got that notice. You're like, "Oh man, I really wanted to get that thing, and the price I wanted." Here's what you do. Okay, you can raise the down payment. Okay, the earnest money deposit you're putting in there, you can raise your earnest money deposit substantially. In other words, I've actually bought properties, guys, or my entire purchase price was provided in the earnest money deposit in cash. Okay, believe me, it works, and I got the deal. Sometimes I've done half of it. I'll put half down, and that really gets the seller motivated, and it obviously increases their confidence because this is your security. I mean, this is your earnest money deposit, your hand money. That's going into the lawyer's escrow account. Okay, I know it sounds risky, but it's a great way to get the deal. Another thing you can do is this: instead of just raising the price, like let's say it's a property for 349,000, and you offered 320, and you find out there's other offers. What you can do is a lot of investors will say, "Well, you know what? I'll go to a full price. I'll go to a 349, and I'll probably get that property." I wouldn't necessarily think so. Everybody's thinking the same thing. I'll go to full price, and it's a good deal, and I'll still get a good deal out of this. Some of them will be smart enough to say, "You know what? I'll go to 350. I'll add another $1,000 to get that deal." Well, check this out. Other people have thought of that too. So here's what we do. We'll go to $350,137.56. It sounds crazy, but just follow the logic here. What's really neat is this. You just beat out everybody else by putting in another $137.51, whatever that was. And I've actually had that happen before. I've been a victim of it, and I've been a victor in that scenario. I went to a property one time I bought, used that same exact scenario, went over the list price was 349, whatever it was, and went to 350 and added another 157 bucks, whatever it was. When I was going there with my contractor to do basically what we call the punch list to figure out what's the actual cost of this rehab project, a guy came down the street and he said, "Are you Mr. Wilson?" I said, "Well, in fact, I am." He said, "You're the guy that bought the property." I said, I am. He said, "You beat me out by $137.51. And I just laughed. I said, "I apologize. It's one of my strategies. When I have a good offer, a good opportunity like this, I know other people are bidding. I learned in the past that most people's logic will go to the next higher dollar amount, like a level amount, 350, 351, whatever. And all I do is add an extra few dollars and cents, and it usually gets me the deal." And he said, "I wish I'd have known that." I said, "Well, now you do." And and I wished him well. And he thanked me for it, by the way, too. He said, he said he was impressed with the strategy. Great strategy. All right. So there's two strategies so far. Number one is don't raise your offer price, but raise the earnest money deposit to reduce the seller's or increase the seller's confidence that you get the deal to go through. Number two is raise the offer price but add just a few extra dollars and cents at the end. Okay. But here's another really awesome strategy. And this strategy works, guys. Hi, Strider. How you doing, buddy? Good to see you. This strategy also works well in this scenario. Whether you have highest and best offer, or let's say you're negotiating and you and a seller are like a few thousand off, maybe a 1 or 2 percentage points off. Here's the strategy. You know how on a settlement sheet, you've got the buyer cost and the seller's cost, right? On a settlement sheet for a closing. What you can do is this. You can say, Mr. Seller, we're pretty close. We're just a percentage points off, maybe a couple $1,000. You can do this through your realtor if you're working with an investor agent. Okay, your investor agent will know this. If we train them, they're going to know all these strategies. What you do is just to say, look, the buyer will pay all of your seller's closing costs, okay, including commission, transfer tax, any of the prorations, any cost of closing to the seller, their buyer will pick up. Now, what you do in your offer price, though, is you don't just like add that to your offer price. You want to net the price down, okay, far enough that the net to the seller is what they want. So the seller is going to get their $350, for example. You've made the price $370, assuming 20-something thousand in closing costs, okay? 20,000 in closing costs. So the net to the seller is the same. The advantage for the buyer is all of those closing costs become an expense in that year, okay? So at tax time, let's say your buyer's in, a 25% tax bracket. At a $20,000 increased cost, they're going to get back $5,000. Well, the net to the seller was only up $1,000, $349 to $350. Your buyer gets $5,000 back at tax time. They actually made an additional $4,000 by using this strategy. And here's the other cool thing is, remember I said the expenses to the buyer are expenses. They are commission, transfer taxes, all that. And they can take that in the year that they sold the property or bought the property. On the seller side, let's say they kept all that stuff in there. Some of those things have to be added to the cost basis. You follow what I'm saying? And they would pay capital gains versus a tax on the net income. There's a huge benefit here to this strategy to both parties, but mainly to the buyer, and it works like a charm. And people are like, holy smokes, that's a genius idea. Matter of fact, I just brought this up in a weekly webinar, and the first response was, that's a genius idea. And I wish I could tell you I came up with it on my own, but I learned it from one of my earlier mentors, and I gladly share it with you. So it's an awesome, awesome strategy. Now, here's some other things I want you to consider, okay? Similar, let's just keep the subject going here on, your contracts, working with investors, working with buyers, working with sellers of investment real estate. And let's say you're an investor agent, okay? What I want you to do is to protect yourself with an agency agreement, okay? What I mean by that is this. When we work with investors, we don't do broadcast marketing. We're not sending out postcards. We're not door knocking. We're not cold calling. We use targeted marketing. We use specific language patterns to pre-selected audiences. We call it target marketing, okay? It's niche level. The language patterns speak the language of the recipient. Let's say you're sending these marketing pieces out to chiropractors. You could use chiropractor language. If you're sending it to an engineer, you would use a lot of technical language. Okay. Now, because of the way this marketing works is you're not cold calling or door knocking. It's called direct response marketing. They're responding to you. Okay. And when they do, you want to interview them. Okay. Now, what I do is this is what I want to suggest to you. Number one, always build rapport first. Build rapport. How you're doing, how'd you get into real estate investing, what's your background, what do you do, blah, 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 blah. Build rapport. Once you built rapport, remember, they've responded to some marketing that you gave them. Let's say you sent them a booklet with tools, information, and sample inventory from the area. Real good, meaningful stuff that they can use, and that's why they want to work with you anyways. So you already know that they want what you send them. You follow what I'm saying here? They're more highly qualified prospects at this point. So the next part of the conversation is, in the inventory that I sent you, the sample properties, what one or two stands out above the others as far as looking most appealing to you? and you let them talk about that. Hey, I like the fourplex on page 7, and have them tell you why. Right? Maybe it went up in value over years. Maybe the rents, the positive cash flow was really what they're looking for. Whatever it is you're looking for them to give to you what you need to serve them, which is their needs and wants. Okay, so that's why we do that type of marketing, because we don't want to have people just say, just find me a good deal. That doesn't help us. That doesn't help us help them. We need to get down to a granular level of what they need and want. And it starts with the marketing. Now here's the cool part. So they respond to you, you get them on the phone call, you build rapport, go over the sample properties. Now once you get to that point, you can say, great, it sounds like something you're interested in. Would you like to move forward with this? I can show you what we do. And typically they'll say yes. If they say no, then put them on the back burner. But if they say yes, say great. In order to work with you and help you succeed investing in real estate, we're going to be dealing with other entities, banks, attorneys, other sellers of properties, other realtors. I need to demonstrate to them that you've been qualified, okay? Your information will be held confidentially with me. I'll show you how we do that in a minute, by the way, okay? So would you please tell me, what do you have available in savings? And don't ask them what do they have in cash, just how much money. Don't ask how much money you have, just say, what do you have in savings, okay? Then you ask them, do they have an available line of credit? And that tells me two things. Number one is, a bank liked them enough to give them a line of credit, number one, and if it's available, they're disciplined enough to not spend everything. Those are the kind of people I want to work with, okay? The third question is, do you know what your credit score is, okay? I'm sorry, ask them what is your credit score? Because you're assuming they know what their credit score is in the question, and if they know it, they tell you, and by the way, you know that they can qualify for a loan or not at that point, okay? The other thing you know is that they're disciplined, and they have cash, they got a credit, and they have a good credit score. Those are the folks we're going to work with. I'll take 2 out of the 3. If they got good credit and they have some cash but no line of credit, I'm okay with that. Or if they have a line of credit, little cash but a good credit score, I'm okay with that. I'm looking for 2 of the 3 to work with them. Now here's the cool part. To protect yourself, as I'll say, great, would you please email me with a recap of our conversation so we can get started? In your own words, recap the conversation we just had. This is you telling them, the prospect. Some of them won't send the email. They don't care. Let them go, right? They're telling with your behavior that they're not busy, they're not interested, they're too busy, whatever. The ones that respond to you and send that email back, you've got them. They want to work with you. They like what you do. They showed you commitment, engagement, and they're action takers. Oops, sorry about that. The next thing you want to do is send them your agency agreement and say, great, we're ready to rock and roll. We're in sync. Everything you said is exactly my understanding. Let's go ahead and get started. Here's my agency agreement. Please sign this and return to me, okay? And if you want to give them the 3 reasons why, here's the 3 reasons. And it's in the agency agreements anyways. You would say, this guarantees you confidentiality, because remember, I've got to have your information to be able to represent you to other entities. The fact is if I don't have you under agency agreement, you don't have my guarantee of confidentiality. Anything you tell me, I can share with other entities. If we're under agreement, I'm legally obligated to keep your information confidential, and it is. That's number 1. Number 2 is, think about it. I'm a professional. I work with investors. That's what I do. I'm a certified investor agent. This is you speaking to them, okay? Working with me is not like working with other agents. I know some investors are working with 5 other agents. Let them do that. They're typical agents opening doors and pointing out the pretty carpet. They're not certified to work with you. I'm certified to work with you. I'm trained to work with investors specifically, and that's what you get as a result of this. And by the way, we work exclusively with you, and we expect exclusive in returns. In other words, I'm going to give you my 100%. I want you to give me your 100%. Are you okay with that? Okay. The third thing is you've got other that you're working with that you can meet this guy too. All right. This is all part of that community. That's just what I'm getting at is this is how you get an agency agreement signed. In any case, that's what I wanted to share with you. Now, when you do that, you're basically ensuring that you're working with them and to give them everything you've got 100%. You also ensure that you're going to get paid because you're not one of 5 other agents. You're going to get whatever they buy, you're going to get paid. Okay, that's why we do that. And when we do that kind of stuff, we have a more professional business that we're working on, and then we can those strategies I gave you a moment ago. We're in a better position to use those strategies because we're working with a client we know is going to follow through with the transaction. That's why I want to do this 2-part approach here on tonight's Facebook Live. So I hope you guys enjoyed that. Great, quick 15-minute session. I love the subject. And just give me more feedback. Whatever you guys want to talk about, let me know for the next time. And I'll see you all next week. I'll see you next Wednesday, same time, 5 p.m. Pacific time, Wealth Wise Wednesdays. God bless you. We'll see you next week. Take care, guys. Bye-bye.